Okay, hi everyone. The time now is 2 p.m. So welcome to another episode of Meet the VC series. Right. So for those who are new, Meet the VC series is part of the E27 webinar series. So the goal is to bring you a step closer to the active and the prominent investors in the region. So together we can have a better understanding of how each and every one of them approach a potential investment opportunities. Right. So for those who are unfamiliar, the series is brought to you by E27 Pro membership. Right, so the Pro membership allows you to tap into our active networks of over 250 investors that will facilitate your fundraising journey. Right, so far we have successfully connected over 900 successful connections between startups and investors of their choice. On top of that, you will also be getting the pulse of the ecosystem through over 150 news sources, right, including the hyper-local sources. And also you have the opportunity to showcase your company, get priority listing, as a fundraising startup. And this is very beneficial for new guys in the block, right? So this will actually put you on the radar of the regional stakeholders. And last but not least, also an announcement from us is that we have officially launched Perks. So Perks is a feature under E27 Pro membership that allows you to tap into over $10,000 in cost savings through credits, offers and discounts from our partners like AWS, HubSpot, Typeform, Stripe, Canva, and so on. So do check out the link in the description and feel free to reach out to any of us if you have any questions. Okay, so now that we are all on the same page, right? So let us get back to today's session, right? So today we're pleased to have with us Martin from Genesis Ventures. So he is the operating partner, the co-founder, and also the general partner of Genesis Ventures. So Martin, would you want to say a quick hello to everyone?
Hi everyone, Helen. Thanks for having me here. You've given me a lot of titles, but in a fun, generally we wear many hats. So
Right.
my name is Martin Tang. I'm co-founder and partner of Genesis Alternative Ventures, Southeast Asia's premier venture debt fund. We empower growth and minimize dilution for the region's leading venture-backed companies. And
Right.
I'm very excited to be here this afternoon.
Yes, we are too, right? Thank you so much for being here with us. So Martin and I had the opportunity to have a quick catch up yesterday, right? And I know the audience is eager to learn about Genesis Venture, but maybe we can start with, Martin sharing a little bit about himself, right? And what exactly motivated him to start Genesis Ventures and start working with startup in the region?
Yeah, thanks, Han. We did talk about this yesterday. Life is really interesting. It's only and it's really when you look back and you look at the things that have happened and you look at where you are right now. There, you're like, oh, okay, I can understand why all those things happen, and they happen for a reason. If
Right.
you ask me 5 years ago that if you told me 5 years ago that I would be a founder of a fund in a relatively new asset class, I would say you're crazy. I'm happy to be in banking and just do what I do best. But like I said, interesting things happen. People you meet along the way kind of shapes your future. So I started in venture debt along with my partner
Mhm.
at the bank in 2015. And back then, venture debt was a very, very new asset class, and we really trailblazed venture debt for Southeast Asia.
Right.
As we continued to make investments, we proved that the venture debt model would work and thrive in Southeast Asia. Um, and the opportunity to start a fund to do this became very apparent. And one thing leading to another, we had I met our very, very key third partner,
Okay.
and the rest is history. And that was how Genesis was formed. I mean, it was by no means an easy decision to leave a comfortable banking job, to become we are entrepreneurs as well. To become an
Right.
entrepreneur, there were a lot of unknowns. But I think as a team, what we have done is to stick together and figure things out and support each other. I think that's
Right.
really important.
Yeah, I agree. Thanks for sharing with us that. Tell us a little bit more about your investment philosophy.
Sure. So venture debt as an asset class is very, very unique. I mean, we have
Mm,
the privilege of working with the best in class VCs in the region and globally. And that is because of our investment strategy. We are providing debt capital to help fund growth of really exciting, fast growth startup companies. And part of the strategy requires us to invest when there is an equity round or when the company still has a lot of cash. And really that means that we have to work closely with our VC partners. And other things we look out for really are sound business model, sustainable business model, cash runway, good founders, and exceptional support from the VCs themselves. So those are some of the high level criteria we look out for whenever we are investing. So venture debt is not, it's a very mature asset class in the US, Europe, and even in India. And we see that in the next 5 years, it will be a very, very exciting place to be in this whole venture ecosystem for Southeast Asia.
Right. So you mentioned that venture debt is, your core investment instrument, right? So to what extent has it played to your advantage when you are surrounded with, long-standing and prominent traditional VCs in the region?
Well, so it certainly makes our life slightly easier because there is already a level of filter. But that's not to say that we just go with whatever the VCs tell us to go with, right? We have a highly capable team internally that has experience in equity as well as debt investments, as well as operating experience. So whenever we make an investment, we approach it as though we are the primary investors, and not saying that okay, we're going to rely on Mr. VC A, B, C, or D. Due diligence and just go with it. It's a very, very in-depth kind of DD process.
Right.
Quite interesting as well, because we don't just look at what the VCs have looked at, but we pay more attention on certain other items like cash flows, margins, and all that are very, very important to assess the repayment ability of a potential borrower.
Right. Okay. So with that in mind, I know that Genesis Venture has an investment in Horangi, which is the cybersecurity company, right? And you also have investment in GoWork, which is the premium co-working space in Indonesia. So are there specific sectors or industry or even funding stages that the fund is focused on?
So I'd say generally we are sector agnostic,
right?
I.e. whatever our VC partners are looking at, we'll definitely take a look at it. But there has been a preference for us just as an investment strategy to look at B2B enterprise software companies, because those tend to be a bit there's a lot more stickiness in terms of customers, and that lends itself very well to venture debt, repayments and all that. But that's not to say that we will shy away from a really outstanding B2C company. So we look at everything. In terms of stages, generally Series B and onwards. But again, there's always going to be that one or two super outstanding Series A type of companies. And again, we will never shy away from looking at those.
Right. So, some of the VCs that we have spoken to before, right? I mean, on paper, they say that they only invest in maybe say Series A and above, right? But truth is that doors are always open for, earlier guys to come in, as long as there is an opportunity and they can realize that values. They're happy to sit down and talk with the founders. So does Genesis Venture share the same, say, flexibility?
Absolutely. I always say in finance, never say never.
Right.
There's always that odd Series A company that we have never heard of that come to the block and like, wow, how is it you're able to do 10 millions of annual revenue and we never heard of you?
Yeah.
And a lot of so-called Series A company these days tend to be, they're technically coming to market for the first time.
Right.
But they actually have been bootstrapped, for the last 3-4 years.
Right.
So those are very, very interesting. So, are they really Series A, or, Series A is just that definition because that's their first institutional round.
Right. Correct. Correct.
Yeah.
Yeah, it's kind of amazing that if they have achieved this milestone and they manage to stay low key in a way. Yeah.
There
Okay.
are such companies.
Yeah. So let's talk a bit about your past investment, right? So the 5 companies that you have shared with us, what is the average investment ticket size that we're looking at?
So they vary.
Mm,
They all vary depending on the need of the company, the stage. But I'd say anything from 2.5 to 3 million, we're comfortable writing those first checks, and happy to make follow-on investments where it fits.
okay. Okay. So at the current fund one, you have 5 investments so far. Is that correct?
Yes, that's
Right.
right.
Right. So how many in total that you are looking to invest with this fund one?
So we expect to double our portfolio size by the end of the year. So we are working hard to close those deals in the pipeline. From a fund basis, we are looking at nothing more than 20 to 25 companies.
Okay.
So based on fund size, based on the investment period, that is really where we can deploy. Not be under tremendous pressure to deploy, and
Right.
also have enough manpower to make sure that after deployment we have enough resources to look after those companies, as well as spend time with the founders as well as the key executives.
Right, right. Yeah, I mean, that's the good news, right? I think to all the audience and to all the startups are here today as well who are keen to connect with you. So there's still opportunity. So I'm assuming that the plan to double the portfolio size by the end of 2020, was this direction set earlier this year before the pandemic?
That's actually a very interesting question. So, I'm not going to kid you, right? During the start of COVID, call it February, March, there were a lot of unknowns. But
Right.
I think what we did decisively was to make sure that we had a regular check-in with our portfolio companies, make sure that they are okay.
Mm.
In terms of business model, no one is sick. There are BCP plans in place, sufficient cash runway. If there is not sufficient cash runway, then where's the fundraising plan, right?
Right.
So we've done that, and have to say that I'm so proud of our founders. They have shown they have shown they have what it takes to steer their companies through this really, really tough period. In terms of targets, so we've got some experienced advisors, experienced partners in the team, and a lot
Right.
of them realize that if you do not invest during a crisis, you're really missing out on
Mm.
really strong return opportunities. And investing in a crisis also helps you, really it allows you to understand what the founder is made of,
Right.
and the companies as well, right? Like, during good times, everyone, you can sing a song and dance, but it's really
Yeah.
during a crisis you can see what this person is made of. So that's given us the insights as well. And in relation to the pipeline that we're seeing, there's no, we do have targets, deployment targets, but it was never a case of by hook or by crook you got to do another 5 deals. It wasn't
Yeah.
that. It was more like we've got all these pipeline. Let us take a look. Let us understand. Let us wear our COVID lens. Understand, does this business, does this startup have a place in with COVID?
Mm.
The answer is yes. Let's find out more.
Right, right.
Yeah.
Yeah. So we are now in Q3, right? So we're just 1 quarter away from the new year, right? So it's good to see that, the roadmap that you have laid out for the fund is going well and things are still on track, right? But what about 2021? Is there any specific direction that Genesis Ventures is navigating towards, or any changes that you think that will bring about even more values for, say, the portfolio companies, but also for the fund itself?
Yeah, so investment 101 is it not to lose money, right? So
Yeah.
although I would say now in August there are a lot of the unknowns are known already, but we're not letting up. We're not taking our foot off the pedal in terms of portfolio management. We continue to support our portfolio
Mm.
companies, fundraising or anything else that they need, and regular check-ins and all that. So that is something that we constantly remind ourselves that, yes, COVID is here and all that, but it's about making sure you have your masks on whenever you go out.
Yeah, that's right.
Yeah. In terms of 2021, that's really interesting. So depending on who you talk to and on which day you talk to, you get a different answer.
Right.
There are some people who feel that, look, second half, Q3, Q4, it's time to play catch up. But there are some that feel that, it will get worse before it gets better. There are many views out there, and for us, it's really still about being focused, telling ourselves, yes, pandemic's here, but there is this need to go out there and get things done. And if you go out just to Orchard Road or in town, you see that there are people really trying to get back to normal life,
Yeah.
albeit with a mask or social distancing. It will be like that for a while. I don't think we'll get back to that pre-COVID 2019 as yet, but we'll get somewhere there. So 2021 again, we will be out there. We will be looking for the good companies. So the good companies will still be there. They will still get funding, and those are the companies that we are looking for.
Great. Right. So we time travel a bit there, right, to 2021, right? So let's rewind the clock to where we are now, and let's do a check-in with your portfolio companies, right? So how are they doing in the pandemic? And have you witnessed any interesting pivots that you can share with us?
Yeah, so like I shared, so we've been very, very blessed, fortunate that our portfolio companies are doing well. And when I say well, we have a longish cash runway. A lot of them have just been fresh off a fundraise, or and they still continue to be engaged on fundraising. So it's not a case where 2 months of cash left, and do or die. So on that front, we've been very fortunate.
That's right.
What was really interesting is that I have to say, all of our founders, they really took the circuit breaker, the lockdown, very, very seriously. I mean, you can say that, hey, we're a startup, we don't need to follow this, that. You can say all that, right? But when we engaged them, everyone had a COVID plan already. They had a business continuity plan. I mean, you can say that, but the companies you invest in are much later stage, B. But it was really that mindset. The mindset was, it's wartime. We need to prepare for winter. And on the OPEX side as well, I mean, not nice things to do. I don't think any of our CEOs would have liked to make that retrenchment announcements, but it was necessary. And hopefully, those people who got retrenched are able to find meaningful employment now, if not later.
Right. Yeah.
So in terms of pivots, right? Again, maybe not such dramatic pivots, but it was really more of that realization of we can do a lot more with a lot less. I think that's a key realization. And there's some, in terms of pivots, again, a lot of them were forced to look at funding. Like, are we locking up a lot of money in the form of working capital? Are we? I mean, this is really basic balance sheet management. Are we? For every dollar of revenue we make, did we have to spend $5 first and then start to collect that $1 later? So it ties up a lot of money in working capital. And for a startup that's growing 20-30% month on month, you're going to have to raise money every 6 to 8 months and dilute yourself. And that's not ideal. So a little bit of dialing back, changing the business model, as well as taking venture debt to fund the working capital, those are smart things to do.
Yeah, for sure. So it's great that your portfolio companies are doing fine, right? So you have seen your fair share of founders, and their company pulling through this pandemic, right? So in your opinions, what would be the key takeaways or what would be your advice to, our audience, to the founders out there? How can they cope with, it might sound like a luxury as of now, but how can they even thrive in this new normal?
I think first thing is the mindset. I think the mindset. Even for us at Genesis internally, we've had to make sure that we come in with a positive mindset, because once if you step in the office and tell yourself we are dead ducks, we're going to fail, then you might as well just stay at home.
Right.
So coming in with a positive mentality, it helps you to think clearer, and when you are thinking of strategy, when you have that positive mentality, you find that your mind is open up and there'll be more ideas coming. As for founders, my advice is really treat this COVID seriously, how it could affect businesses, but not be paralyzed by it. You realize the problem is there, but you don't say that, okay, because there's this problem, we can't travel, then we're not going to do anything. But it's really to say the problem is there, how do I get around it?
Right.
And especially when you're talking to investors, it makes sense to tell people what you're doing before COVID, during COVID. I wouldn't say after. So life with the narrative is really life with COVID, and at least you give the investors confidence that these are the issues, you have thought through it. I think that is very, very important. What would scare us is someone who says, COVID is not a big thing, I'm not going to care about it. We've totally ignored it in our forecast or business plan. Then that's going to be an issue.
Right.
Yeah.
So something that you mentioned to us yesterday as well, right, is that the changes don't come by themselves, right? They are the results of difficult decision being executed by the management team, right? That will induce positive impact on the performance of the company. I mean, that shows a certain set of qualities in terms of the management team, in terms of the founders, right? So what are some of the qualities that you look for in the team when considering the startup, the company for a potential investment, right? And if there is a singular most important trait, in your opinion, what would that be?
I'm a bit old school on this front. I'd say one of the top of my list is integrity. Founder integrity is very important, because you can have a not so great business model, but a lot of integrity. We can still deal with it. We can still invest in you and trust that you're not going to do anything that is detrimental to us as investors. But then there are, if you have a great business model but not so good integrity, not so good reputation, I mean, if we invest in you, it's like every time we have to check behind our backs to make sure that our position is protected, or at the next series of fundraising that we are still on the cap table somehow.
Okay.
So I think to me that is really, really top of my list.
Right. Okay. But beside that, what let's say we try another two qualities. What would that be besides integrity?
Again, it has to be like a cockroach, right? Never say die.
Yeah.
Again, it's very easy to say, oh, I'm founder of such and such company, we have raised X millions of dollars, but we'll see what you're made of in a crisis. I'm not that old, but I've lived through the GFC. I was a banker back then, and then now this crisis, right? I'll tell you, it's never easy. You can say, oh, I've gone through GFC and whatever, but it's really this thing that is in you. Will you do the right thing? Are you do you have that endurance? Can you take the hard knocks? It sounds really cliche and all that, but can you take the hard knocks? Can you look at the crisis and say, no matter what, we're going to go through it. We're going to go through it. We will go through it. So leadership also is very important. Can you rally your troops to go through the storm with you? So there are, if you look at the really, really good founders, a lot of them, they have that never say die attitude. And a lot of it, it impresses me. Like,
Yeah.
they've gone through really, really tough stuff that actually they don't need to. I mean, a lot of founders today are ex-consultants, ex-bankers, in very, very comfortable jobs. So they didn't have to do this, right? But,
Right.
I always say you get to do this.
Yeah. That's true. That's true. So it goes without saying that, the team itself is a very crucial building block of any successful company, right? But that's not just it, right? So if I were to put in front of you three factors, we have the team, the product services, right, and the market, right? So what would be the first criterion for you to consider for an investment opportunities? How would you rank these three factors and why?
This is really one of it's a tough question, right? It
Right.
sounds very simple, but it's just, I think one cannot do it without the other. You
Mm,
have a great team that decides. So hypothetically, right? So today we all know the ride hailing war is over. So we can have a great team that comes to us and say, hey, we're gonna build another ride hailing app to unseat all the incumbents.
right.
I will ask them, what did you have for lunch? What did you drink for lunch? And also the market, right? I mean, the market is finite. Yes, we can say 600 million, 700 million Southeast Asia, but
Mm,
it has to be that right product fit for the markets. Very diverse markets, different spending power. So it's really like I would say like a pieces of a pizza coming together,
right.
forming the pizza.
Mm,
I can have one great slice, but it's just one slice.
true.
So your this question is really, I'd say, did the chicken or egg come first, right?
Yeah, that's true. That's true. But yeah, thanks for sharing your opinion with us, right? So we come to the last question here, and it's on the lighter side. Okay. So, what are the three most common traits or say factors in your current portfolio companies, right? That set them apart from the other opportunities that you have come across before.
Of the companies, not the founders.
Yeah, of the company.
So for sure, business model is one of it.
Mm,
We see a lot of business models, but some are, it's really a question of, do we need another company like that, right?
mm,
So it's about asking those questions, and if we say that, yeah, the market needs such a product, so we go into the numbers and see, is this viable, right? I mean, one of the ways to understand the viability is what people are willing to pay for such a service or a product. I mean, you can see those in the margins that the company is making, or whether they have to heavily subsidize customers to buy the product or not. I
mm,
think that's two. And also looking into the future, right? Like, is this solution, is this product temporary? Has the company thought about what the market will look like in the next 2 to 3 years, and kind of evolve the product along the value chain?
right.
Whether, so back to this solution, is this a one-trick pony where, yes, you're the first one, really interesting, but then in a year or so, or even 6 months, you have a
Mm,
copycat already. Then
mm,
how do they build that defensive moat and become that undisputed leader in this
right.
particular vertical?
I see. I see. Okay. Yeah, I think that was the last question from my end. Personally, I learned something, and I know the audience will learn something as well. So I hope you enjoy yourself. So we're moving on to the next exciting part where we opens the floor to questions submitted by our audience. Right. So we have the first question here. The question goes, right, when should startups consider venture debt versus loans versus equity?
Hmm.
Yeah, what is this trade-off between pricing and control for each of these options that the founders need to take into consideration? And then the last one would be the difference between the ROI from working with venture debt VCs versus traditional VCs.
Right. Okay.
Mm,
So let me answer the first question. When should startups consider venture debt versus loans versus equity?
mm,
Um, I would say a really good time to be thinking of having venture debt in the capital structure would be Series A onwards. And also this relates to the business model of the company. Is it a business that has a lot of recurring income as well as working capital needs? So I would bucket venture debt and loans as the same group, just because traditional bank loans are not available to most startups, at least until they are much later stage. So venture debt really would be the bank for startups. So I talked about the right stage in terms of ROI of venture debt versus traditional VCs. Again, it's a very, very different asset class.
Right.
So return on investment for a VC would be much, much higher because they're taking a lot more risks. We come in somewhat slightly more de-risked, and hence the return expectations would be slightly lower.
Okay.
Right. I hope that answers the first question.
Yes, that was a great question. We have another one here. Does Genesis Ventures prefer convertible loans rather than direct equity investment?
Right. Neither. So venture debt gets mistaken as convertible loans very often. So, but we are not. We are plain vanilla term loan that does not convert to equity. We
Right.
do take equity warrants, but it's a very small amount of the loans that we make.
Okay. Let me see what would be the next questions. We have quite a few here. Hey, give me 1 second. Okay, we have, how do you check? So you mentioned integrity as one of the top quality that you look for in a founder, right? So
Right.
how do you check for integrity of a founder?
Well, these days we live in a very, very connected world, right? There's a lot of digital footprints.
Right.
That's one. And two is also about checking the person out, right? I mean, you can go through that whole KYC process. That's one. You probably won't find anything unless that person has been into prison or something, or was involved in some really large scale grand theft. But if you talk to these days, so and so founder comes to us, we're able to check around with our VC friends as well as our startup network, like, hey, what do you think of this guy? And you'll be surprised that you get very, very balanced feedback.
Okay. We still have time. Okay. So the next question from our audience is that what kind of collaterals do you require from startups when you're considering to invest, right? Is it similar to VC funding?
So VCs don't take anything in terms of collaterals, and neither do we. Again, the whole idea of venture debt is to provide, very flexible growth capital for startups. And today most startups, when we go visit a startup, it's usually in a co-working space in an office. There's not much in terms of hard assets anyway. And if there is a startup that has hard assets to offer us, they probably shouldn't be talking to us. It shows that they're probably much later stage.
Right. Okay. Thank you for that. Okay, we still have one more here. So what is the typical tenure of venture debt, and how is the repayment schedule usually structured? So that's the first part. The second part is, what are the key factors that determine this structure?
Yeah. So, key factors, I'll answer it backwards. So key factors that determine the structure really is how the company operates. How do they make margin? What is their cash conversion cycle? They have to spend a lot upfront, wait for something to be manufactured and then sell it, or are they a software company where, look, you just buy a subscription, but you pay us every 30 days. So understanding how the company works helps us to create a useful structure. The typical tenure of venture debt is up to 3 years. So it's a term loan up to 3 years. Repayment schedule is, the most common one is a monthly principal and interest amortization.
Right. Okay, so I think that was the answers to the questions. Let me find another one. Someone's asking what's the interest rate?
Interest rates, well, again, it's a risk-adjusted pricing.
Right.
If you look out there, I think on a USD basis, venture debt can be anything from 10 to 15%.
Okay. Um, okay. I think I'm afraid that's all the questions that we can accommodate for today, right? So thank you, Martin. That this has been a highly engaging session. We all learned something, and I hope you enjoyed it as well.
I
Right.
did.
Yeah. So there are other questions. So let us know how we can reach out to you for these questions.
Sure. Well, you've got you can see my QR code at the back. You can scan it. My email is there. You can reach out directly or get my contact from Hung.
Right, right, for sure, right. So for those who are unaware, Genesis Ventures is also one of the 290 active investors that is part of our ongoing investors and startup matchmaking program under E27 Pro. We do have investors looking for investment in the pre-seed all the way to Series B rounds. So if you are one of them, do check out the Pro membership and always get in touch with us. If you have any questions, we'll be happy to sit down with you to explore these values, right? And as mentioned, there are other values that you can be realized for your companies as well, such as the regional exposure, right? The insights as well as $1,000 in cost savings, right? So next week, we'll be having with us Dave from Incubate Fund, right? So do make sure you registered for the webinars, right? And we will also send out a feedback form after this, and this is very important to us. Please take some time to fill in the feedback form and tell us what other topics that you're looking to hear from us and how we can provide more values, or improve our webinars and provide more values to the audience, right? And also, if you have any inquiry, we are everywhere, right? You can reach out to us via email, social media, also join our awesome Telegram channel. So once again, thank you, Martin and Genesis Ventures for being here today, right? And thank you everyone for tuning in, for your amazing questions and for your time. Take care, and I'll see you next time.
Thanks for having me, Hung.
All right, thank you,
Right.
Martin.
See
Bye.
you, everyone. Thanks for your time. Bye.